Hey guys, welcome back. Time for another Wednesday options update. As you can tell probably from the title and the thumbnail, I had a pretty good week. And we're going to test out doing some strangles. I spent some time this weekend looking over my really old options that I used to do way back in December and January, and I used to do a ton of strangles. And I think I just got away from it because there was a trade that went bad on the call side, and I just realized that I can make money in a more of a relaxed fashion, right? I don't need to chase profits, right? I don't. I'm not. It's it. My goal is, slow and steady. Slow and steady wins the race. So I don't want to. I don't want to force myself into something just to get premium, if that makes any sense. So if you're new here, like, share, subscribe, do all that good stuff. Down in the pinned comment below is the ways you can support the channel. And yeah, let's just get into it. No, those of you new here, first off, I always go through my long positions where I've been assigned stock and I'm wheeling them and all that good stuff. And then we go into the single stuff. So some of this stuff will be repeated later. So we'll start off with Rocket. Nothing new here. We just got a couple of puts that are being threatened right now because Rocket closed at 1730, and I have three puts, two at 17 and one at 16, expiring August 20th. So we'll just keep an eye on that. Now SoFi has just been going down, 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 and that's okay. What I did, it went down a little bit, so I bought back my calls that I had for 23 cents and realized $102 profit. And then I went 3 weeks out and sold some calls, 4 of them for a strike price, the same strike price of $18 for 65 cents. So we're just going to hold on to SoFi and keep cycling through these covered calls, and hopefully one day it'll pay off. Right now, I mean, the position's only down 3.5%, so not a big deal. AHT, that's the big bag holder. It's got earnings in a few days. Hopefully they get a pop and I can get out of them. I am into some calls, and I'm not sure how these calls work because I have 5 contracts at $5 a piece, at a $5 strike, I should say, but the stock did a 10-to-1 reverse split. So I don't know how this would work. I don't know. I'm a little confused that I still have 5 contracts with a $5 strike. So I don't know how that's going to work out. I guess I'm just going to have to let this expire. So that's AHT. Next one is CVM. I bought back the calls today. Reason why is because they have earnings next week. So I just wanted to uncap it, locked in the $85 profit from those calls, and we'll see. Hopefully it makes a run up, and if it makes a run up, we'll probably just sell it. So that's all my leaps and longs. Nothing big going on there. So let's go over to my options, my bread and butter here, and the first page here shows me the option contracts closest to expiration. So I like to look at this really quick, just so I can see what options, because if it's in red, that means it's in the money. Okay, so I got 2 that are currently in the money. I got this Vizio put down here at 2250 strike, that's in the money, but it's still 2 weeks away, so not even worried about that. One that I will probably have to manage, we'll see, unless XOP decides to make a run the next few days, is this one. That's currently at 82.82, and I have an $85 strike, 3 days to expiration. So I'll probably be managing that one. I'll probably roll it out. What I'll probably do is, it's only 1 contract, I'll probably look to roll it out probably a month and then I'd roll it down. I'd probably get 2 contracts to really get the strike price down. I'd like to get it down below 80 and make more money on it, collect extra credit as well. So we'll go through what I did this week. Yeah, we got fire trucks galore going on, but in the background. Sorry about that. But what I put on from July 28th, which was last Wednesday, through Tuesday, which is today or yesterday, if you're watching this on Wednesday, I played Six Flags. I put on 2 contracts for Six Flags at a $30 strike price. Collected 60 cents a piece for those, and I got paid 28 cents to put on that trade. So I have $120.28 of premium cooking on Six Flags, and that's a 51-day expiration. Well, it was 40. Wait a minute. Why does that say? Oh, it was 51 days till expiration when I put it on. There's 45 days left. Next up, I did a SoFi. I threw a put on down at $13.50 if it kept on going down. I wanted to pick up shares and get paid for it, so I got a put expiring August 20th at a strike price of $13.50. Collected 53 cents on that. Just 1 contract there. And then Overstock. Overstock tanked on earnings. So I went ahead and went to September 17th and put a 50 strike on. 2 contracts at 70 cents a piece there. And then ARC-G went to September 17th. Strike price of $75. Collected $1.45 there. CMA, which is Comerica Bank. Again, another 9.17. I like doing these 45-dayers. Strike price is $60. Collected 85 cents premium for 1 contract there. IWM, kind of my bread and butter, monthly or every 3 weeks or so. I like to always have at least one of these on. I got down to $195 to September 17th. Collected $1.58 for 1 contract there. Now we get into the Strangle. Corsair, which is the mouse, keyboard, I believe peripherals, and all kinds of other stuff in the gaming industry. I did a 40 and 25, so I sold a 40 call and a $25 put out to September 17th, and collected one contract each, and collected about $1.15 for that combo. Now SoFi, there's those calls, 4 contracts, 65 cents a piece, and we got 31 days on that one. Now I did another strangle on Owens and Minor. It's a healthcare industry. I did a 55 and 35, 55 call, 35 put, collected about $1.05 on that one. What I like to do on the call side on a strangle is if I can get above the 52-week high, I would like to, and that's what I did here. Corsair, I wasn't able to get above the 52-week high, but it's a pretty good distance there because it's sitting at $27 right now. I was a little aggressive on the put strike because I don't mind wheeling that one. So Owens and Minor, 55.35, not too bad there. I think I got support at 35 on Owens and Minor. So 55.35 on that strangle there. And then I went back to the well. One of my favorites is Camping World right now. Again, September 17th, 45-day DTE, 32 strike, collected 60 cents, sold 2 of those. I got paid 19 cents to do it. So that's all that I've opened. Let's look at what I closed real quick. I didn't close much. We're going from here. Lemonade, they were threatening to go in the money, so I before this one expired, it expired on July 30th, but I closed it on July 29th for 20 cents, pocketed $124 there, 35-day hold, a little longer than I wanted to. That AXL spread that I did last week out of boredom actually ended up being a very good trade. Closed that one out, profited about $58 or so for 7 days, so I got out of that one. ARC-G closed that one for 35 cents, so I profited about $80 there. 34-day hold, and as you know, I sold that other one, and then IWM, and another one that I just keep rotating in and out. Bought that one back for 53 cents, profited $100. And then there's those SoFi calls I bought back for $102 profit. And Winnebago, this was a good one. I put on July 22nd, a 60 strike that I collected $1.40 on, and I bought it back for 50 cents on August 2nd. So $90 for an 11-day hold. And this counts the weekend. I kind of don't like that. I wish it would just count trading days, because it wasn't very much. It was like 5-day hold or something like that, 6-day hold. And then Camping World, bought that 30 strike back for 20 cents, profited $60.49, 32-day hold, and then I resold it. So what do we got for premium cooking? Well, let's see. So how the overall week go? Not bad. I closed out 7 contracts, realized profit of $700.80, and I opened 10 contracts. So I got $1,294.06 of premium I collected in the week. So I like that, putting on more than I close. So grand total I have premium out there right now is $3,962.50. And you'll see there's $1,891 left in August, and I got $1,721 out in December. I mean, not December, September. And then I got a $350 out in December. That's for a TQQQ put. So I never shared this, but I'll share it now. Maintenance margin on the account, $30.3 or $30,300. That's the margin requirement to hold all the positions that I currently have, which is probably about 30 contracts roughly, something like that. And the net liquidity, $84,200. That's what, if you close out all your positions, that should be what you should net. And buying power used, what that does, you divide your maintenance into your net liquidity, and that tells you essentially how much buying power you've used. So I'm sitting at 36%, which isn't bad. I told you I was looking at my old trades. I was running like super hot, like 60-70% buying power used. And yeah, of course I was making a lot more money back then, but I was being very, very risky back then. And I really much prefer the way this feels now, going longer dated, using less buying power, still collecting good profits. You know, I'm averaging, I think, around $2,500 per month. You know, and as this net liquidity grows, the realized profits should scale with that. So that's all I got for you guys. Doing new Strangles. I don't know if I picked good ones this time or not, but I'm gonna see how they go, see how comfortable I am in them. You know, because if the call side gets stretched out, you know, I could buy the call or I can buy the shares, either or. So that's all I have. If you have any questions, comments, and concerns, leave them down below. Like, share, subscribe, do all that good stuff, and we'll talk to you later. Thanks. Bye-bye. I am not a financial advisor. The information contained in this video is for entertainment and informational purposes only. It is not intended to be investment advice. Please seek a licensed professional for any investment, tax, or legal advice. Thank you.